Today is the tariff deadline, and what is that going to mean for the market? We know that if countries are currently in negotiations and if they're progressing, that the tariffs are going to be postponed. But for the rest of the countries, they're going to be getting letters from Trump, and the initial tariffs are going to be imposed starting August 1st. What impact is that going to have on the market? Well, we really don't know the full extent of it. I do know that this is a negative news event. This is uncertainty that is still pending. We saw that Japan and South Korea, Trump felt that those negotiations weren't progressing, and so he imposed a 25% tariff. We still don't know what's going to happen with Mexico, Canada, Europe, India. Those are all rumored to be in the works, but we don't know. My suspicion is that if we don't hear anything this week, meaning that there's not a hard line, yes, we're going to be imposing X amount of tariffs on them, that the negotiations are probably progressing. I think that Trump's patience is wearing thin, and that's why he imposed those tariffs on South Korea and Japan right away. So if we don't hear any news, chances are that those talks are still going ahead. We don't know what the inflationary impact is going to be either. What we do know is that a lot of companies have front loaded, they're front running the tariffs right now, and they've imported a lot, so those inventories need to be worked off. From a market perspective, yesterday we had one of the tightest trading ranges that we've seen all year. You can see lots of choppy price action here. So before we get too far into this, let's take a look at the stocks that I suggested in my Sunday video. AVGO. I suggested selling an out of the money bullish put spread, 250, 250, 250, bullish put spread, getting a 50-cent credit, and doing that with the July 18th expiration. We needed that pullback on Monday, and there was a brokerage upgrade on AVGO that kept it afloat when the market had pulled back. So, not able to get a fill there. We're getting too close to expiration now. No go. We don't want to do that trade. The other stock that I showed you was JOBY, and I showed you selling some out of the money puts on that stock. You could have sold the $10 puts all day long for 50 cents. They were bid there for most of Monday. That's turned out to be really nice. Now, we're not out of the woods on that trade, but we have a nice entry price. I think those puts are probably trading for about 15 cents. We're using the July 18th expiration, and we are willing to take assignment. With this nice little liftoff during market weakness, it provides us with confirmation that this stock wants to go higher. So if the market starts to pull back, if we get assigned, no problem. I'll take assignment on that stock at $9.50, which is right down in this breakout area. I would be a willing buyer there. Really nice stuff. A great way to generate some income while we're waiting for the market to find its bearings here. So, from a news standpoint, I believe that the news is going to start finally settling down. My gosh, the whole first half of the year, tariffs this, China that, big beautiful bill. We've had wars, conflict with Iran. All of that seems to be settling down. So from the end of July and into the beginning of August, I think the market's going to get back into a more normal pace. It's going to start getting some economic data points, and we're going to start hearing about what the earnings guidance is for the future. Now, one thing that I've noticed is that the analyst estimates, which were around 9.2% increase, 9.5% increase, this is what they were looking for Q2 back in March. Now those estimates have been revised lower down to 5%. That is a huge haircut. And we haven't seen a reduction like that in over a decade. So expectations have been lowered dramatically. So even though we start getting a lot of beats, realize that the bar has been lowered and that stocks may not necessarily rally even when those earnings estimates have been exceeded. So what's going on today? We had a big gap up, really nice stacked green candles that looked like, hey, we're off to the races here. Everything looks fantastic. Not so fast. And this is why we don't FOMO into trades. We don't rush into trades right out of the gate. That move very quickly reversed, and now you can see long red candles through the opening price. We are in the gap, folks. This is a gap reversal. Look at the volume down here. This is likely to be a trend day, and here's what we need to watch today. So we've got 1, 2, 3, 4, almost 5 touches along the support line. What does that mean? It means that yesterday we had buyers kind of lining up by the dip, by the dip, by the dip, by the dip. Where are they going to set their sell stops? It's going to be right near the low of the day from Tuesday. So when the market fills the gap, it doesn't have far to travel to test those stops, and it's likely to. And when we get there, we're likely to see a long red candle. Well, that long red candle would put us not too far from Monday's low. So I believe that this is a nice, meaningful gap reversal. Long red candles, very little retracement, not a lot of green candles in here. We just had one right here. I'm looking for this to be a bearish trend day. Let's take a look at the D1 chart, and we can see here that that was the high from Friday, the better than feared jobs report. Okay, 147,000 new jobs. That's not a particularly strong number. It was better than feared, and we learned that almost half of that could be attributed to state and local governments, not from private sector employment. Also, not particularly good. Well, no one was going to fade that number on Thursday, excuse me. Friday was a holiday. Thursday, we had an abbreviated session. No one was going to fade that number. No one was going to short that number with the potential for the big, beautiful bill getting passed. So the market gapped up and it continued higher. But since then, we've seen selling pressure. There's also important news in the sense that the big, beautiful bill was an upside catalyst. It's one of the last remaining upside catalysts that I see over the course of the next month or two. And it didn't generate a big upward move. It was already priced in. And then what do we have today? We have a move that almost challenged that high, and it got smacked down immediately. That's a sign that sellers are aggressive. So I am going to be looking for a bearish trade today. We're going to go through some of the searches here, and I'm going to take a look. I do like STX on the short side, but this stock is just starting to roll over a little bit. You can see it's had some pretty steady selling pressure. It's below the EMA 8. This is a nice tight trading pattern, so there have been a lot of buyers. I'm not picking it because you're likely to see a pullback, and it could be down to maybe the 135 level or so, but it has the potential to have a nice big bounce because these buyers are not going to go away very quietly. So I'm not going to pick that one. Adobe sets up pretty well. That's another stock that was on our search. So ADBE, that has been in a compression. It has not been able to rally with the market. I am short futures, by the way, at 62.93. Those are in nice shape right now. I am short STX. I did it for a day trade and making a little bit of money on that. This is a compression right here. If Adobe can get below this compression, it could be a nice short. And here you can see very steady selling pressure. Also, the stock not able to get off of this low, even with the market moving higher. And there you can see that was the earnings reaction. Stock sold off and compressed near the low, near the base, when the market was doing what? When the market was moving higher. That tells us sell, 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 sell. There are sellers. Even when the market's going up, they are keeping a lid on this stock. So I believe a breakdown here is going to set up well for a nice short, and we don't have to worry about earnings because it just announced about a month ago. I think that could be the short that I focus on, ADBE, but we need that breakdown. It's also fairly hard to find good shorts right now because the market has been moving higher. So there's not a lot to pick from. Chewy is a stock that I've shown you over the last couple of weeks. I love that short. And look at it start to come in. Really like that one. So that's another one you can consider. Let me take a look at the list here. CVS, nothing too great there, too much support right in here. So we want to be below all of the major moving averages if possible. I think ADBE, Adobe could be your short pick of the day. And I'm not seeing a whole lot else. And I want to get back to trading. So I'm going to leave you with ADBE. There was another one. Actually, there are a couple of restaurant stocks. CMG, I think, could also set up for a decent short. That's Chipotle, and you can see it resting right on that 200-day moving average. So what I suggest doing is setting a couple of alerts here. And that way, if it takes out this low, it's got plenty of room down to the 100-day moving average. And you can see how it had this long bullish engulfing, long green candle and almost a bearish engulfing candle here. Now the open from that long green candle has been breached. That should have been support, and we're right on that 200-day moving average. If the stock can get through this 200-day moving average today, I think it's got a chance to leak lower. Take a look at the M5 chart. There goes the market. This is going to be a bearish trend day. So keep that in mind. I wouldn't take bearish longer term positions. This is just a one-day move for right now. We've got to see what happens over the course of the next few days. Very light news environment this week. Not a lot of economic news, no earnings news. All the earnings news is going to be coming out next week. I did notice Starbucks as well, and they announced that there are some possible suitors for China, and they're talking about possibly getting $10 billion for their stores in China. China's been a very tough market for them. There's almost a rebellion against American companies there, at least as far as Starbucks is concerned. Same store sales have been down 14%. This is a short that I've shown you before. Here's what I like. I like the fact that it gapped up to a new relative high and it got smacked down hard and back below that 200-day moving average. I think we're going to start to see some follow through selling on it, but it still has that 100-day moving average to get through. The market's been strong. Stocks have been strong. They've got technical support levels that need to be breached. We need that confirmation. So, in terms of what you should be watching for, I've given you 3 stocks that I really like, but we've got to get below that technical support. Starbucks is one of them. Chipotle is another one. Adobe is another one. Those are your stocks to watch. If we start to get some follow through selling today and the next couple of days, those stocks are going to crack down. And when I do my Sunday video, we're going to take a look at them. The tariffs, we don't know what they're going to do right now, but I see more potential for bearish headlines coming out of that than bullish headlines. And we already saw the sell-off earlier this year based on higher tariffs and how that could cause supply disruptions. I see that August is shaping up to be a very weak month. And I think that corporate guidance is also going to be very weak. In some cases, they aren't even going to provide it. Like FedEx 2 weeks ago said, we don't have any clarity here. We're not going to be providing guidance. Well, that is uncertainty. Plus, we have a Fed meeting at the end of July, July 31st. They've been hawkish. They are not cutting rates. And this last jobs report probably gives them enough breathing room to not cut, in their opinion, and to continue to wait. Well, when the Fed goes in recess during August and September, the market gets very, very nervous, especially if they're preserving their hawkish stance and if we don't know if a rate cut is coming in September. So bottom line, I'm keeping my trades very short term, and I am somewhat bearish, and I'm waiting for those technical breakdowns. And I believe August, September are going to be a couple of weak months. That's how I'm playing it. How are you playing it? Let me know. Please write how you're trading this current market in the comments, and I'll reply. We will see you Sunday. Trade well.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.